Hey, I've made this VA worksheet for you so that you can see how you can use a higher interest rate to offset your closing costs and buy this new construction with very little money. In the first section here, I'm assuming the price of $269.9, which is what was on the listing sheet, zero down. We'd have a base loan of $269.9. But the VA has a VA funding fee. If you receive VA disability pay, you're exempt. Otherwise, you pay a fee. The fee can vary. The standard fee is 2.15%, which is what I assumed here. It can be higher for second use or for some other circumstances. The VA funding fee is rolled into the loan, so your loan amount actually exceeds the sale price. Now, as I mentioned, we're going to talk about the monthly payment. I went with one of the highest rates because we're going to get a big lender credit to lower your closing costs. It's a 30-year loan, so 360 months. The principal and interest, or the amount needed to repay the loan, is $1,376.54. Also, you'll pay 1/12 of the taxes. Now, this is new construction, and the realtor hadn't indicated the exact taxes, but if we assume that they're $5,800 divided by 12 is $483.33. If the taxes turn out to be $4,800 divided by 12, you'd only pay $400 in here. And then your insurance. You're going to buy that wherever you want. I'm assuming $900. Could be more, could be less. It's your thing. You're going to buy it wherever you want. But whatever you pay, that divided by 12 is part of your payment. So the principal and interest, tax and insurance, also known as PITI, principal, interest, tax, and insurance, the full payment is $1,934.88. Now, I said if you took this higher rate, you'd get a lender credit. So we're going to start. The very first thing when we look at cash to close is this lender credit. So if you took that high rate, you're going to get a 3% lender credit of $82.71. Your total cash to close is about $1,800. You've got this big lump lender credit, a bunch of closing costs, a bunch of prepaids, and when you add the three together, it came to $1,888.69. Not that I'm going exact to the penny, but you could negotiate for the seller to pay some money towards closing, but in this case we didn't. Now, where did these numbers come from? See how it says, see the itemization below? We're going to go look at that itemization in a minute. Anyways, if you owe $1,888, you give a deposit, then you pay for maybe a home inspection and a water test, you get an appraisal and a final inspection, you owe the difference at closing. So the total you owe is $1,800, you subtract out these things that you pay in advance, and the difference is due at closing. Now we'll look at that itemization. I have to come way down here. Appraisal, credit report, transfer tax, water test, lenders, title insurance, flood owner's insurance, recording fees, attorney fees, home inspection, final inspection. All of that $5,200 was the $5,200 up here. So this isn't extra down there. It's an itemization of what you already saw. So the same thing here. Prepaid is tax, insurance, interest. If it's $4,900, then that's where that came from up there. So last but not least, this is not a loan estimate. This is just for informational purposes. I always use the same format in my worksheets, so I like to explain it to you one time anyways to make sure you understand. And please, of course, always call or write with any questions. Thank you.